Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to join you on Monday evening, as we usually do, to chat markets. And I wouldn't say they're all that easy at the moment, are they? We're getting a pullback within a broader uptrend in some places. And we're getting, I guess, a bit of a rally in bear markets in other places. So a few potential transitions going on. No doubt we'll talk about all of this and more. Let me try and center myself there. Once we talk about the disclaimer, which very quickly, you know the drill, says that everything's general advice. You need to consider it carefully. You need to consult the help of a financial professional before implementing it. It might not be appropriate for your personal circumstances. The rest of the information in that disclaimer is important. You should read it. You can do so in the recording of this presentation, which I'll post to YouTube after its conclusion. Always remember, though, that trading is risky. You could lose money. In fact, you're probably going to lose money. You're always responsible for the stuff you do, not me. The agenda for today is to do some of that analysis: trends, price action, candles, manage risk, repeat with consistency and discipline. That's what we do here. Along the way, you'll have things that you want me to have a look at for you to do those things. Or it could be anything to do more generally with the 3 M's of trading: the money management, the mindset, and the methodology, of course. Let us head over to the Amy Broker screen while your requests are rolling in. And I'm going to start with the portfolio management model in the US, which we would, when I say we, in my ChartWatch ASX, not ChartWatch ASX, ChartWatch Markets. There's a few ChartWatches now, I don't know if you've noticed. ChartWatch Markets goes out Monday, Tuesday, Thursday, Friday, and on Wednesday we do a webinar with Market Index Live, so that's the continuity. And we're at FRP, and I said on Friday's candle, just sort of hanging in there, because with lower peaks and lower troughs, if you don't believe me, I'll draw them in for you. And there's a peak, obviously, there's a lower peak and lower troughs. We don't know when this next one's going to end, with Nasdaq futures up about 300 points. I reckon it's probably going to end tonight because we'll get a high and a high low. Okay, so this is extremely methodical here. It's very objective. Lower highs. A candle with a lower high and a lower low starts a new downtrend. A candle with a higher high and a higher low starts a new uptrend. And the transition between those we draw as peaks and troughs. And if we did get a candle like this one here, which I've highlighted, we'll have a higher high and a higher low, and we'll set this trough here as a trough. Set that low as a trough. That low there is 22,563. It is super important. I can even label it now. Obviously, when we do the next ChartWatch Markets, it'll be labelled as such, but let me do that again, because you can't see it anyway, but pasting in gobbledygook here, 22,563. That's the reason why I'm labouring on this point, is this is now a really important level for the Nasdaq bull market. It is what I like to call the go, no-go zone beneath that. So let's say, hypothetically speaking, and let's hope it doesn't happen, but we can picture these things. Sometimes it's helpful to picture how these things might look, so we're not surprised, we're prepared for them. But if we were to see something like that, and we would then continue to draw in our peaks and troughs, we would have another set of lower peaks and lower troughs. We'd have a definitive close beneath this point of demand. And the reason why I think this point of demand is so important is because there was just so much. There was a decent amount of price action that occurred on Friday to create it. I wouldn't say there was a great amount of volume here that created about average volume, but I think it's important. We could argue then that 22,058,185 is also very important. I think it's also very important, but this is the one that I'm now looking at very closely. I hope we don't get there. As you know, I like bull markets better than I like sideways markets, that's for sure. Don't mind bear markets, but I'd still rather have a bull market. So I'm still cheering this one up, as it were. So FRP is the conclusion on that one, and that's in the absence of that candle there. And look, I think you could, I made a comment on Friday that I wouldn't be in any rush to reduce, to add back risk that might have been taken out through this period. But if we get a decent candle tonight, then I think you can. Let's put it that way. Now let's head over to the Aussie market, where we've actually had some changes here. So we're not at FRP. I moved to 2/3 risk position. I actually think there's one in there, if I'm not mistaken. And down to here, and today brings us back up the other side. So lower peaks and lower troughs here. I set out the warning with the close beneath the short-term downtrend ribbon. I should have done it on that day. I gave it an extra chance. I don't know why, but I moved on that day. And then on Friday, I fell, really. With that black candle, with the lower peaks and lower troughs, with the short-term trend ribbon having crossed lower, it's turned pink now. There's just too many signals here. That area there acting as a zone of static supply now. There's just too many factors there to run at 2/3. So I felt I had to go to a half. Not like I'm justifying it to anybody. I'm not trying to do that. It might seem like I'm labouring the point, but it is what it is. The candles, I think, dictated that course of action. I'm explaining why, not justifying why. And then you get a day like today, don't you? No surprise. Back up. Closes smack bang on the high, opens at the low, closes on the high, creates a high trough, and you start to think, well, maybe I was a little bit early there. So be it. That's fine. Officially still at half R, and I think I'm happy to stay that way, to be honest, until we can get an interaction with the short-term trend ribbon at least. So I close above that with continuing decent price action. I expect we'll be rising peaks and rising troughs by then in candles, and I could entertain going all the way back to 2/3. So, I also said on Friday that moving from 2/3 to a half is not something that happens instantaneously. It's a process. So that's where we are. Look, I wish we weren't. I wish it was just FRP and we're up at 9,200 right now. But we don't get to pick what candles we get next. And there is a reason why. I mean, the point I'll leave you with here is there's a very good reason why we're not FRP here, because this could very easily, and would not surprise anybody listening tonight, if we saw something like this and an interaction down there. I don't think anybody would be surprised. So we're dealing with, more often than not, we're never dealing with certainties, and we've made a call based upon that more often than not, or at least I have. I don't know if you've got, maybe you can let me know how your overall portfolio management model is going, or if you're applying one at all, because I tend to spend 10 minutes on it every webinar. Maybe it's for my own benefit, but I wonder if you've adopted a similar system since you've been listening to me. Quite a few people saying yes, and hopefully it's been helping. Give you another thumbs up, or if it's better than the quote unquote flying blind that you might have been doing previous to having the system. Yes, good. Look, any system's better than nothing, because at least we can now measure our success or failure by that system. When we're random, we don't know what's doing us right. We don't know what's doing us wrong, and we'll never be able to fix it. So at least we've got something consistent. We say, you know what, Carl's portfolio management model is a piece of junk. I'm never using it again. If you've used it for a year or 2 years, and you can see it come. But hopefully we're seeing, for the most part, it tends to just keep us safe. And look, I shouldn't have to say this, but it did the same thing through here, and we made all these transitions through here, and we started to take off risk there and risk here, and I think we were the lowest risk position for most of that move, and then we started to put it back on, and for the most part, you actually dodged that bullet. You kind of were full risk here, and then full risk here, and not full risk there. And that's all. If that's all it does for you, then it's a winner, in my opinion. Let's keep moving. We're going to try and find something to push us off this idea of full risk position in the US and half risk here. How can we be so far behind? The Russell 2000 is the next logical place, therefore, to go. And, it's looking more like the ASX 200. And we know this, right? We know that we don't ever resemble the Nasdaq, but we often resemble the Russell 2000. It's a more egalitarian measure. It's not just those big, 7 or 10 stocks that are influencing this, although it is still capitalisation weighted. There's less influence of those bigger ones. Smaller capitalisation, higher leverage to the health or otherwise of the US economy. And that one's a bit more sideways, but you wouldn't say that's a train wreck, but you wouldn't want to be FRP there either. Not a train wreck, so I wouldn't call it a red flag just yet. I think we're still okay. Where would this not be okay? Because, we only catch up on Mondays. Geez, it's not that far away from not being okay, don't you reckon? Where is it really starting to worry us? So, it gave it a tickle on Friday, and we're going to need a decent follow through tonight to avoid getting beneath, some pretty decent points of demand there. Next one down is where that dash line is, and it's an old point of supply, should act as a point of demand. So, and then we've got the long-term trend ribbon. So worth keeping an eye on, I think. Let's head over to Europe, and they're not looking as good either. And the DAX is, you'd almost say that was rolling in the short term, certainly not the long term, but we're not seeing that coordinated growth in equity markets that we were seeing not that long ago, a few months ago. So there's a little bit of trepidation. And then look at that FTSE, that's amazing. Why can't we be the FTSE? IBEX in Spain, why can't we be in Spain? Hang Seng actually looks half decent, to be fair. It's had its pullback, and now it seems to be building back up the other side. Nikkei, very shallow pullback, still looks very strong. That's a one-way down, modest pullback though. It looks very, very strong there in Shanghai. That's encouraging, and also there on the A50. Quick look through the sectors. I think this is always quite illuminating to see within our tin pot middle market where the money tends to be flying, because I don't know if you've noticed, but there's only so much to go around. So yes, there's money coming to the market, but it just tends to be pushed in one direction and therefore away from the other. And this is an away from sector, I think, at the moment, which is consumer discretionary. Even look at today, I mean, it barely even bounced. The other one that's obviously an away from sector is the information technology sector. I'm just trying to find it, but that had a decent bounce today. That surprised me a little bit, frustrated me a little bit if you've got some shorts out there, but that was actually a decent bounce. So this one just showing that on a relative basis, the discretionary sector is still very much on the nose, and yet we're getting some improvement here in energy. A little bit baffling to me, but we did see an improvement in energy prices on the back of the Trump strong-arming Modi into not buying as much Russian oil. Financials, I think, is okay. Big move up in ANZ today. We'll probably get a chance to talk about it. I think CBA is starting to improve, and NAB and Westpac still look very strong. Gold sector, interesting. We'll have a look at the gold chart in a little while, and that actually, the gold chart looks decent, and it kind of looks a bit like that. So still happy to back that trend. I know there's been some tricky times there. Healthcare is obviously another funding sector. It's a sector that is being sold off and to fund purchases elsewhere. We talked about that one. We talked about that one by default. Materials, I still think, is okay. Not as good as it was a few weeks ago, because some of the heat came out of those critical mineral stocks. It makes you want to cry when you see some of those A-shaped charts. My model doesn't do well with those A-shapes, because it tries to keep the faith as long as possible, and it is not rewarded. And unless you're really aggressive on some of the candles, it's very tough to get away with as much profit as you can, or if you did get in later to the trend, a smaller loss. Property actually starting to look a bit like a funding sector there. G&G's much of that though. Staples, there's no interest in that one. Telecommunications is a tricky one. It's caught between the fact that Telstra looks very strong, okay, and the fact that CAR and REA look very weak, okay, and in fact SEEK starting to pull back as well. So that is a very interesting sector, simply because it is pushed and pulled in different directions by its high PE, low PE constituents, and then utilities neither here nor there. Okay, let's we'll actually do London Metals Exchange quickly. Still okay. We're looking for red flags, remember. We're not finding them there on aluminium, nor on copper, although it has, that's a decent pullback, but I think we're still okay. Decent pullback there on iron ore, not as okay. That one never got going, still going down. Decent move up on lead, encouraging. Still okay there on tin. Still okay just on zinc. Lithium carbonate, you would have seen my tweets and posts and articles today. Obviously, we'll head over here. That's the candlestick chart. And a very, very, very strong candle today. Whatever you think about the underlying commodity and the people who are obsessed with it, that's if we took the label off that one, we didn't know what it was, we'd say that's a turnaround setup, and we would be officially calling it, under my model, a new bull market heading up the other side, because lo and behold, like spot on, absolutely perfect, absolutely nailed it. If I didn't tell you they did this so well, you wouldn't believe me, but there's the trough set at or above the long-term trend ribbon. It's also confirming the short-term trend ribbon there as dynamic demand. and plus the price action, plus the candles. Bit of a wobble last week. That's just the market, isn't it? So 87140, that's the bottom of this range, I think, and then the top is 9146, but this is probably the real number to beat here, 90180. But today's volume would suggest that there was a great deal of demand coming into the market. It took out a great deal of supply. So it wasn't that this demand was hitting a supply vacuum. We know that there's a lot of supply in this market, and that supply was chomped into. Now, hey, we don't know where that supply is going to make its next stand. Last time around, it saw fit to make it stand there at 9010 pretty well. So it's going to be very interesting, a very interesting next few candles here. And the Australian spodumene concentrate, actually, I've got a chart there. You know, it did its own thing at its own long-term trend movement as well. So lo and behold, maybe the lithium zealots are right about all of that demand. You never know. I don't care, of course. Charts are going up. Let's head over to the... I've got some good news. I go here, and Chrome is working again on OBS. There was an update, OBS update, and now it works. Who would have thunk it? Silver futures will kick off there and head up the list. That's a very decent chart, and I thought it was gone. I thought it wasn't coming back, but it's come back. You know, it never gave you a reason to be all out. I think we agree on that. You might have been, you know, had a third left, for example, but you know, you would have taken some off the table. I think now moving back to a 2/3-ish position, or even FRP, if you're brave enough to have a crack at 53.77. Now that candle is still live, so really everything I just said is predicated on that candle closing looking like that, because if it ends up with a big upper shadow, then forget it. This is the key move, and that's how fickle sometimes. We know markets can be fickle. They can hang on that candle. And what we're really wanting to see here, or what we're really waiting for confirmation of, is that FOMO, is people who had forgot. Let's face it, ladies and gentlemen, maybe you fall into that camp. You forgot about silver going to $100 an ounce for about 2 or 3 weeks, didn't you? You realised it could probably only go to 53.77. So it's not just you. Lots of other people thought it for 2-3 weeks. And that idea of I'm going to miss out was absent. As we start to build, as that candle gets wider and wider and longer, this idea that, okay, 53.77 is formality and $100 is the real game here, or 60 or 80, whatever it is, that starts to build back in, and the fear of missing out starts to take over. And the other side of the equation, where the supply side's sitting, the supply side all the way through here, they were thinking anything's possible. Oh, I'm going to get $60. I'm going to get $80. I'm going to get $100. On this day here, they think, geez, I'd be pretty happy with 53.77. So it only takes a few big candles, one big fund to take profits, spill out a bunch of supply, which they can probably then buy back because they were the first ones out. They'll be the first ones back, first ones back in down at 46. And once they hoover up that supply, if it is that way, if there's more supply, it'll keep going down. It'll rotate. It'll evolve into a bear market. We'll see those signals. But if that supply dissipates, if it's gone, and there's only demand left, we will get candles like today. And that's the message here. And all the people now who have supply, they're starting to think, maybe I don't need to sell at 53.77. Maybe I can get $60 again. Maybe I can get 100. And you need that psychology in the market. You need the FOMO and the faith that we'll get more. Faith will get more. I don't know. There's going to be an acronym there as well. So I think that looks very interesting. Gold, funnily enough, gold was kind of the stronger one, but now it looks like a little bit of a laggard, but still fine. Haven't looked at these for a little while. Platinum, palladium, the story's not there. And I kind of said at the start of this, the story's not there, but they did arc up, to be fair. Let's go to copper, much like the London Metals Exchange, a little bit in the middle, probably some tariff stuff going on. Iron ore surprised me. It looks like it's doing its best dying swan act there. I'm going to keep moving on that one. And uranium is just wobbling around, thoroughly uninteresting. Natural gas, stick with the line charts here. Interesting there. The US natural gas looks half decent. And I'm only spending more time here because I know that energy sector is going up. I'm going to try and find some justification for it. And I'm not really in the commodities, but maybe those charts aren't as awful as they were, perhaps. Okay, let's finish our whip around the grounds, we did look at Bitcoin. It has broken down. It looks like it's trying to come back up, and it'll be all important now at the long-term trend ribbon. We'll see what candles we get there. Is this a really sharp, confident bounce? I don't think it is. And I think we'll see some supply come in here, but we'll wait until we do. And ditto there on Ethereum. US dollar is a little bit of a pullback, but in itself is pulling back now to a level. Everything's inverted, of course, where it might find dynamic demand. As I alluded to before, we'll finish off with our bonds, which are actually super interesting right now. And the most interesting ones for me have to be the Australian bonds, because we're not getting any more rate cuts, and the market's starting to realise that, and we're pushing back up to 3.8, 3.9, 4%. It's starting to look like, which is great if you've got money in the bank, but not great for the prospect of lower mortgage rates. I don't know where you sit in that spectrum. And 10's looking pretty steady as well. And maybe that's what has undermined the Aussie market. It's certainly a narrative that makes sense. In Japan, just curious more than anything else, still heading up, still supporting the Nikkei. In the US, they're going nowhere, and that's good too. A little bit of a rise, I guess, based upon the recent Fed meeting, but we're looking for red flags and we're not seeing them. In fact, we've seen those. I want to go down here and just check the banking index, that there are no cockroaches scampering out from underneath the fridge there. And it doesn't look like it, because we're heading back up here on those two. So I think we're okay. Conclusion, no red flags. Trust your trends, price action and candles on your benchmark indices. Okay, let's do the offline requests, which are going to appear very soon. So I'm just organising a few things here. And I've got Missy with Domino's asking about, I think she might have gone aggressive long on Domino's, I'm not sure. And it wasn't all that clear from the message, but I'm pretty sure I got this part right. She was aggressive long on Domino's. We have talked about the prospect of this. I didn't endorse it, but I said there's, if you really squint, it's open. It's available under the model. And she said she minus 1/3 today on that aggressive trade for that candle, I'm guessing. So I guess maybe wanting my opinion on what I think of that course of action. I don't mind it. I actually think that makes a lot of sense to me. We're hitting 20. I know 20 is not necessarily a round number for Domino's in the sense that we've never been here before. We have, but for the people that are just starting to trade it, it would be a level that would be working on their minds. Okay, sorry. There we go. Thank you. No, you've got to let me know. That's good. Domino's, and we're looking at the aggressive setup that Missy had, and that candle there at $20. I mean, why is that candle there? Oh, well, Carl, the market was down on that day, or I don't know, there's profit taking. No, look, $20 is probably why it's there. That's a logical, explanation for it. We've also got, just reinforcing this idea that $20 is important. Well, was it important in the past? If it was important in the past, it's probably going to be important in the future. There are people stuck in at that level because they're obsessed with round numbers. We can't help it. So I get why this supply is coming in here. And if I was long, I don't know where Missy's long, but hypothetically, let's say 16 or 17, and it's now 20, and the idea of minus 1/3 with that candle. So it's not just 20. 20 is irrelevant by itself. When we get the price action there to confirm, then we start to have some relevance. It's aggressive. It's in the long-term downtrend ribbon, which we know has been responsible for killing a couple of promising rallies in the past. So I totally get it. I totally agree with you. And I think that's right. I think minus 1/3 was order of magnitude the right place to be. I don't think you want to be all out of this aggressive trade, because maybe it gets taken over tomorrow by that private equity firm at 25, quality on sale, whatever. What do I know? And it's 20. So how, I think some skin in the game is the right way, because we've got this, this asymmetric payoff, I think, because the downside we're going to limit. We're going to limit through candles, through price action. And we can be pretty quick with those as well. Yet the upside, I guess, is more open-ended. So totally agree. Confluence of factors, candle, $20, long-term trend ribbon, neato. Question will become, okay, well, where would we start to take some more risk off the table? obviously looking, we don't want to see lower peaks and lower troughs, confirming that long-term trend ribbon really as a point of supply, dynamic supply. Another big black candle on the peak, that sort of stuff. I think we're pretty good with it. And as a last resort, probably close beneath that short-term trend ribbon as it catches up. For us, really behaving a bit like a trailing stop loss. And that's it. Where would I add risk to this one? Well, it's in the trend ribbon now. Long-term trend ribbon. The long-term trend ribbon has turned amber, so I guess it's starting to become more of a turnaround sale. But no, look, for me, it's still got a long way to go. At least a trough in the top half of the ribbon would be nice. A trough above it, but we're giving up a bit to get there to have that certainty. And I need that certainty for this one because it was such a horrific downtrend, and because the long-term trend ribbon really hasn't done us a lot wrong. It was amber for so long there, but even then, you can see that it never really dispensed with it. So I think it deserves some respect. Now, I think the second part of Missy's question is about shorting, and I don't know if it's related to this because I don't see a reason to go short in this case study. It's still having some risk in the game on the basis that it's an aggressive setup, potentially adding risk on the basis that it could turn out to be a turnaround setup, but not shorting just yet. If it started to show really definitive signs that this long-term trend ribbon is indeed behaving as an area of dynamic supply, much like what happened here, we've got plenty of case studies that, that sort of candle, at the very least, a cluster, once we, maybe that candle there, this last one I've highlighted, short-term trend ribbon interaction, short-term trend ribbon failure. These, I can't explain it any better than showing you in pictures what I would need to see to want to go short Domino's again, okay? And maybe it's not such a big candle that you get, but at least at that point, we're starting to show rejection of the long-term trend ribbon. We've got a peak that's formed beneath it, cluster of black candles, at least beneath the short-term trend ribbon, okay? So I think we're a ways away from that, and there's no point drawing any more in on the basis that it might happen. Let's just let it happen. We'll do the analysis. Then the question, I think, from Missy became, how do I go short? And I did a really good explanation of this in Wednesday's Market Index Chart Watch video. So, Missy, I'll direct you to that. I'll give you the start counting 30-second version. We can trade options. We can trade CFDs. We can set up a stock lending facility with our broker. Okay, for me, the easiest thing is CFDs. Some people think they're evil. I just think they're a tool. I'll remind you that if an apprentice carpenter grabs a nail gun and starts going boom, boom, bang, 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 somebody's going to get a nail in the hand or the eye or the back of the head. Okay, he needs training, or she needs training. They need experience. They need discipline, consistency, all of these things that a trader would need to trade CFDs. Now, if that apprentice, first day in the job, gets a nail gun and puts a nail into his hand, do you blame the nail gun? Do you say, geez, nail gun, you're really dangerous? Of course, that's just stupid. That's the dumbest thing you can do. Yet, that's what ASIC did with CFDs. A bunch of people lost some money trading CFDs, and ASIC went and said, geez, CFDs, you're really dangerous. Well, I guess they failed to admonish the apprentices, quote unquote, the idiots who lost all their money trading CFDs because they had no idea how to trade them, or they had no discipline anyway. They just couldn't trade. Terrible risk management held all the way down on a leveraged product. You can't blame the nail gun, okay? You've got to blame the person using it, because if you put that same nail gun in the hands of a carpenter who's got 20 years experience, seasoned professional, that nail gun is changing the way he works. It makes him far more accurate, efficient. It's a revolution to his trading, much like CFDs can be as well. So don't fear CFDs because any particular regulator came out and said, well, you're all stupid, you shouldn't be using them because they're dangerous. Maybe look at how you use them. And then it's very easy. If you think it's going down, you hit the sell button first, and at some stage down the track, you need to hit the buy button. It's as simple as that. Oh, but Kyle, I don't have any Domino's. You don't need to have it. These are CFDs. You're not trading the shares, you're trading the difference in your transaction. If you sell first, you buy it later, it's the difference. If you buy first, you sell later, it's the difference. And it all happens seamlessly behind the scenes. Obviously, I didn't talk about CFDs in depth on Wednesday because I have to be careful what I say here. I'm just Carl, so I can say whatever I want. Let's go to the next one, which is Dave, who's got SDF. And aggressive, well, SDF, no, it should be SDV, but this is an example of where we might be looking to short. So we've had this big move down. Something's wrong. We're getting the buy the dippers. Oh, that looks cheapers. And we know that the funds have changed their mind on this and they're just waiting for another reason to hit it. And maybe, this could be a short opportunity, but that's not where I wanted to go. But worth talking about. The one that was asked about was this one here. We're going to delete all studies just so we can start fresh. Go to default zoom, go to normal. And I think this is, I don't know what this is. Is this aggressive or is this a turnaround? It's not aggressive anymore because it's not beneath the downtrend ribbon, and it's not a turnaround because there's still a downtrend ribbon. So it's neither nor. And actually, I'm still in the process of writing tomorrow's chart to watch ASX. So I must admit, I actually put this in. As you can see here, the feature list. That's the short. That's for shorts. The feature list, maybe you can't see because it's under my head, but it is in that list because if I scroll around, you see the other ones there. But I actually put it in, and I must admit I didn't zoom in and see that there wasn't an amber there. I'm red-green colourblind, so it's not that I can't see them. It's sometimes when I'm rushing, I might not see it as well as I should. And I swear to you, now that looked amber to me, and I could say therefore it's a turnaround setup. But now we're looking at it, and I am zooming in. I can see it's not. So I may reconsider my adding it to tomorrow's list on that basis, but at the end of the day, there's semantics, aren't they? So we have got some serious interest coming in. So almost before even you look at what's upstairs for these little ones, you've got to look what's happening downstairs and is there interest? Is there somebody finally interested in this? Because for a long time there wasn't. Yes, there is. We've got massive volatility, so something's going on. I don't know what it is. I don't care. And we've got an incredible candle today. By the very fact that it's above the long-term trend ribbon, it is no longer an aggressive setup. Therefore, by default, it moves it into the realms of turnaround. We don't have any pullback, test, or hold of long-term trend ribbon at this stage. So in that way, it is more on the aggressive side of turnaround, isn't it? Aggressive turnaround, whatever you want to call it. Again, they're just semantics. So to answer your question, David says he did not understand the large upward pointing shadow on Friday, which is this one here. You don't have to understand it, I guess. It just is. It went up. A bunch of people thought, hey, that looks like a great price to get out. And they did. And there wasn't enough demand to sustain it after, I'm guessing, whatever news or whatever chat room it started getting hot on. And then today we find that a lot of that supply has actually been removed from the market. How do I know that? Well, they just weren't there today. And in fact, that we actually saw less volume today because there's just less supply getting in the way, but still plenty of demand. Still a bit of supply, no doubt. But the motivation of the demand side is substantial and the supply side is backing away. And now we've cleaned out the dead wood. So in here we've got the dead wood of people who, in their wildest imagination, SDV is a 38-cent stock. The people who are in it now, because we've cleared them out, they're gone. The people who are thinking lowball are gone. The people in it now, they're buying at 40. Where do they want to go? They want to get out at 50. They want to get out at 60, right? So they're starting to think anything's possible. They're trading on the newer information. Where could it go? I don't know. It'll go where it goes, but let's sort of peg some levels here from the past where we did see supply. And, those are all valid areas. And I should be using my boxes because boxes are easier to send across. But I think you get the message that, look, potentially there's a bit here, there's a bit here. I know. We'll get there. And across. And hey, that's the nature of turnaround setups. Okay, we're going to have to deal with some of this stuff. Pretty good today, wasn't it? That didn't seem to be an area that bothered it too much. It doesn't look like 50's a place where the new people getting in are thinking that's all they want. That's encouraging. They want more than 50. we need to watch here, we need to watch here. Oh, look, I think the ultimate goal is probably up there in the 60s, you never know. Could I add risk to it? I think that's the definitive question, isn't it? Yes, I could. I could add some risk to this. No objections there if you want to go plus R. If you had it already, then equals R is also a valid option. And, I like this idea of plus R equals R or minus R because it's process elimination. If we're plus R, we're equals R, then there's absolutely no reason to minus R at this stage. Okay. And I can see David sort of waxing lyrical there about what's happened with demand and supply. And hopefully I gave you an explanation that's satisfactory. Let's go to, and that's it, all the offline requests. So let's do your online requests now, going up to the top here. We've got Sudesh with Meek. And yeah, I think Meek is also in that category. That's not it. You can see it didn't make the feature list today, but it made the broader list. So we go Meek. I'm pretty sure it made the broader list. It should have, because I think you can add risk to it. I'm a little bit concerned about this. So, and by the very fact that it didn't make the feature list, you can tell that I didn't think it deserved risk over and above some of the other ones, because I think this is a serious point of supply that will take some dealing with. And by that I mean, we could do this, or even a few of those sorts of troughs before we get there, or we may even see a nasty repeat of a big supply signal coming in around that 23, 24 level, sort of in the shadow of that. And because those things concern me, I didn't feel it deserved risk more than some of the other ones. But if you like the story for whatever reason, there's some good stuff in there. There's a short-term uptrend. We didn't really hold the short-term uptrend ribbon all that well, did it? Long-term trend is okay, and that sort of held pretty well there. The price action is back to rising peaks and rising troughs, and the candles since that return to rising peaks and rising troughs have been pretty good, and therefore I can see a path to plus R equals R, and the good news is I can't see any reason to minus R at this stage. Is it the best setup that I saw out there today? No, it's not. Adonis has got, hi Carl, hope you're well. I am well, thank you. Adonis, thoughts on the USA stocks? We'll do those at the end, and we're going to go through these all these AI note-taking things that are in here now. That's fine, whatever you need to get the message across. CRN is an interesting one, isn't it, Michael? Between you and me, I'm fascinated by this stock because it was such a great trade on the way down. It was so consistent, and I think it's done really well to kind of pull itself back up and continue to have this ongoing fight with the long-term trend ribbon. I'm not sure yet who's going to win. So I think I'm still sort of an equals R if you've got it, and on the fence if you don't, because it could equally just do this sort of thing, couldn't it, really, and just move back into that long-term downtrend. We've seen the coal price charts. They look a lot like this, don't they? So it probably also depends on what's happening there. As I said, I'm on the fence. So I'm going to see some bad stuff in there, but I'm going to see some half-decent stuff as well. Where could I buy it? I think you want to know. And I could add risk to this. Divide the long-term trend ribbon in two, right? Look, ideally, something like that. Next best thing, something like that. And it'd have to be at least those two things, right? We couldn't do it on anything less. So that's where I'm at. I want to see some semblance of that long-term trend ribbon behaving as a zone of dynamic demand. Why? Because it was so bloody good at behaving as a zone of dynamic supply on the way down. Why do you want to muck around? And by muck around, you can change the first letter of that first word. Why do you want to muck around with the long-term trend ribbon when it's that good? So there's a few things we still need to see, but otherwise, it's clearly it's equilibrium, right, for now. And it was just total wall of supply side. Now it's equilibrium, and now it needs to decide which way it wants to go. Let's go to NGI is the next up, I think. Oh no, Lynas, sorry. Francine, Lynas and MIN next. Now, this is one of the A-shaped ones that very, very, very hard. But actually looking at this now in hindsight, that it's cooled down a little bit, we can kind of see there were some signals there that we could have used. Hopefully you used, and I expect many of you did. I expect many of you didn't. Maybe you've just got a bit overwhelmed or a bit behind it, a bit behind the curve. And I think you'll agree, once you get behind the curve on taking risk off the table, it's then very hard to catch up. So where do we think? Now, can you give me a thumbs up? Can you see each other's thumbs up? I think you can, can't you? As I know we use this. Give me a thumbs up if you can see each other's thumbs up. Good. Okay, so we're all on the same page here because this is meat, right? It's not like our webinars where you can't do anything. So it's all very interactive. It's for organisations to have to waste a lot of time in meetings. Okay, so let's all look at each other, and I know we know what's going to happen. Pretend you don't. Like, this is important. This is Lynas. Like, this was the poster child for that whole critical minerals thing. So if we can figure out when to take risk off the table here, I think we can do it on anything. I know this is a stupid question, but do we take any risk off the table on that candle there? I know this is a stupid question. Thumbs up, thumbs down. What do we reckon? Hayden's thumbs down, Nicola's thumbs down, Sudesh's thumbs down, Roscoe's thumbs down, Zoda's thumbs down, Darren's thumbs down. All right, okay. It's unanimous thumbs down. But we're not far away, are we? Let's see what happens next. So we look, I like to say, if you can get within a couple of percent, a couple of percent is good enough. Like $20, a couple of percent's 1960. I mean, that high says 1950, so it's not there yet. I still think we ought to try and milk that little bit, but we're going to be a little bit more careful, aren't we? Like, if we see something we don't like, okay, this is good. This is still good. Are we adding risk here? Thumbs up or thumbs down? Like, it looks freaking awesome. Okay, we're not adding risk because we know we're going to have to take some risk off the table pretty soon. It would be, for me, it's kind of a pointless exercise. Well, you could, to add risk at that close there is 1955, knowing that we're going to take it off the table 1960, 1980. And, where do I put it? Put it anywhere you bloody like. Like I said, a couple of percent, knock yourself out, whatever you feel comfortable with. There's no rule here. It's the round number. Okay, so we have taken some risk off the table at the end of that candle. You know what I do? I take a third off. Oh, but Carl, shouldn't you be keeping? It's going to go to, I don't know. I don't care. It's $20. It's the first time it's been there. There's bound to be some supply coming in here at some stage. And if there isn't, say la vie, so be it. I'll work with that. Okay. Well, there it is. Finally. Question. Let me get rid of that candle there. That line there. What about this? We've taken a third off. Assume we've taken a third off. Are we taking any more off on this day? Are we going next third down? Let's just work on minus R's. Minus R on this day? No. Good. I'm glad. And I know we all know what's going to happen next, but we still don't have enough of a reason to do it. And on that day, I think we're still thinking, look, they're not great candles together, but for me, not enough. We're still actually kind of making new highs. Well, we are making new highs. We're making new lows. We haven't even changed our short-term trend yet. I better get rid of that because we don't know what's going to happen next. You tell me when. Just a burst of thumbs downs when you would take risk off the table. Oh, I'm looking. I don't think we should. I think you go there. So I knew one would go. I knew Rob would go. That's it. I'm done. I'm out. Mic drop. Rob's left the building. Can't take it anymore, Carl. I'm making too much money on this one. Oh, okay. Well, that's annoying because that's a gap. Yeah, a few people don't like that gap. And you might see the problem with this one is very, very deceiving. Is that looks like a great candle. It's like a great candle hitting the short-term trend ribbon, bouncing off. It looks like it's doing everything right, but that's only if you're forgetting that there's a gap there that still needs to be accounted for. And that's not really a white candle. I know to the naked eye it looks fantastic. And this is the problem, I guess, with Japanese candlesticks books. Many of them will say, well, that's a great candle. But really, we should be looking at it saying, well, it actually looks a bit like this. So let me try and get this candle right. So it would be effectively, and you go from the low. I reckon go from the low because that's the lowest point it traded there. You could go from the close. I don't mind, but again, we're splitting hairs, aren't we? Go from the low and fill the gap, and then it went down all the way down to here, and then it rallied back up to there. So that's what we're dealing with, and I can't bring that to the front, but imagine you can't see the white body there, right? So it's black with a lower shadow, and that candle now looks far worse. Okay, so it's very different. Take that candle away, and you're going, I'll give it more time. It's not so bad. I don't need to manage risk. put that candle back and you're starting to think the supply is, I think supply's in control here of the short-term price. Long-term, it's fine, but I think supply's in control of the short-term price. I would question whether this is a day where you start to take risk off the table, because you've now, start to blend this candle together. You've got some decent signals here, okay? If you didn't do it on that day, I'm not going to complain either. You give me the benefit of the doubt. I get it, because I reckon the next day will be up. I can't remember, because there is, So that's okay, and we're looking good there, and we're just like, just Lynas is doing its thing. Lynas is doing its thing. But what I like about this now is, I reckon we're going to be really aggressive. There you go. We're going to be really aggressive on that next one, because we have our point of supply. It was convincing, and I haven't looked down at volume, and I should. And it was convincing. It was convincing because of this. This makes the supply credible, right? This is why we need to really be careful on the next showing. Somebody's had a crack at it. They're cheeky. These funds are cheeky. Yes or no? They're cheeky. They're not gonna send you an email, right? You're not gonna get a little message, bing. Oh, where's my phone? Oh, Goldman Sachs is going to start selling Lynas again tomorrow. Oh, that's nice of them for letting me know. Oh, they're going to sell that much? Holy crap. Wow. It doesn't happen. This is what happens, right? That's your text message, everybody. And also the fact that they were lurking in the system, right? But you wouldn't have seen it if you couldn't see that black candle there. So I think here we've got some big problems. And I get if you didn't go here and here, I get it. But I think we have to really, really be aggressive here. So minus R, whatever, right? I'll leave it up to you. If you wanted to, now order of magnitude. Let's say we'd built up to a position of 1,000 shares. And on the $20, we knocked out 330 shares, right? So we've got 670 left. Let's say you didn't do it on this day, right? You didn't do it on that day because you felt it didn't warrant it. There's a bit of a low shadow. It's a short-term trend benefit of the doubt, right? Justified on this day. What sort of numbers are we dealing with here on that day? We've got 600. We're plus 670, right? What are we selling here? Throw some numbers at me. I know we can't use emojis, but I don't know. We'll throw some numbers at me. Let's have a look. Jackie's going Jackie's going half of what we got left. What are we thinking? Same with David, half of what we got left. So still some skin in the game, and I think that's the right way to go. Only 2 people. Did everybody else fall asleep? I know it's late over there. Adonis is all out. And that's fair enough too, Adonis. And that's a pretty big text message right there. So I get that too. Roscoe's saying all out. Yeah, look, I don't mind. I was going to say, when the people were saying 330, I was going to say I think that's a little bit conservative. I would say I'd leave maybe a plus, or I was going to say 250 or a plus 2, order of magnitude, plus 200. That's all I'd leave on here, I reckon. And it's just a skin in the game. To make it easy if Lynas pulls something out of the fire, because, hey, it may... Oh, no, it doesn't matter. Look, we know where this is going. All right? But only a skin in the game. And then the next thing I wanted to do there was to say, well, where does that skin in the game come out? Okay? And we've got this wonderful thing of a trailing stop here of the short-term trend ribbon, but we've also got this point of demand, which is very important. So I know we don't need to go forward, but I think we've got to find that's the day there that we're completely flat. We're annoyed and we're frustrated, aren't we? Because we didn't do more. We should have been like, we're going, I should have been like Roscoe. If this was in a chat room and we're all telling our stories, war stories here, Adonis would feel pretty chuffed with himself. Roscoe, I should have, I knew I should have followed Roscoe. He always gets it right. And Adonis, he always gets it right too. And I knew I should have followed them. But the gap hurts here, right? The gap hurts here. That's the problem. If we had just a little candle, little black close, we think we'd be so happy that, we gave it enough time. We gave it a bit more time. We did the right thing. It's the gap and that run that hurts us and makes us feel like we did something wrong. But I don't think we did, okay? And that's the thing. We gave it enough. But I think you had to, on this candle here, such a big signal, just going, and you might say, oh, well, halving what I have is really aggressive. I actually think that wasn't enough. That's my opinion. The people that got all out, I think you're a bit closer to the mark there. But at least we all had. None of us would still have any risk here. Okay, so not too bad. $20. We got some out at $20. Some of us probably would have taken a little bit here. Some of us would have gone here, and some of us all out there, and all of us, even the skin in the game is out there. So it is what it is, and I think there's, whether we make or we lose on a particular trade, I think there's value in at least saying, well, look, I knew what I had to do and I did it. I could every point I was confident in what I had to do, and I just executed, and whatever happened happened. So that's your Lynas there, Francine. Hopefully that satisfies you. Now, maybe Francine is more asking, Francine's probably not even asking about the stuff we did, so I better not stop there. Maybe Francine, maybe you can tell me what you're asking, Francine. Maybe you can say, hey, Carl, instead of just saying, hey, Carl, Lynas and Min, thanks, say Lynas plus 1/3, long-term trend ribbon, question mark. And then I know where you're going with it. So I think public service announcement, I know I tell this to you often. I'm going to remind you, and we kind of forget, don't we? We go through a few weeks and we all forget, and we all just go, LYC, please. Expecting Carl will just walk through the 42 possibilities. Well, if I don't have to walk through the 42 possibilities, we can get through everything a bit quicker if I just know what you want to do. Now, if you're asking for a plus 1/3 question mark, well, yes, it's not gone forever now. Now, plenty of damage is done, but it's not gone forever. So what do we need? We need rising peaks and rising troughs. We need interaction with the short-term trend ribbon, because this, in theory, now should be a dynamic zone of supply. The good news is, what's the good news? Well, the good news is we're here and we've done this, or we're doing this now. So that's what we expect too. So it's still too early for a plus 1/3. High peaks and high troughs, decent candles. Looking at the volume, did we get that sell-off? Did we get all of that speculative hot money that rushed into Lynas? Have we got them out? Has that selling precipitated this deluge of supply into that big smart money that's just waiting there to buy the pullback and get the stock at half the price it was before, right? Just criminal that they've got the power and the ability and the influence to do this, but they have, and they do, and full respect to them. For that to be the case, we should see high volatility in these candles. With certainly some high volatility here, and we should see high volume. And in that bounce, is not really. It feels a bit like a dead cat bounce. It feels like we haven't seen that final washout of supply. So that's a little bit of a concern as well. So look, plenty more to do there for me before I'm adding risk back in. Mineral Resources is the next one, which is still holding trend. $50. Okay, look, and again, I know it's not the first rodeo at $50, but it was a pretty bloody big downtrend, wasn't it? And the low was 15, and at $50, if you're getting it at 15, you're getting it at 20, $50, I think does feel like it. It feels like it's fresh and it's new again. It's kind of a level. I'm not saying that's why it stopped exactly at $50 and went down, but I'm saying that's a plausible, a possibility, ladies and gentlemen. Can I just float that for a second? That it's possible that $50 has had something to do with that peak. So again, keep it in mind when you're thinking about, say, adding risk on that day, because I would have put it in on that day. But I don't look at round numbers and stuff for those lists. It's just, is it a signal? Is it not? I'll move on. I know that a Monday night crew can do that work. So even contemplating getting some out there or waiting for the candle first, no harm in that. And on that candle there going, you know what, that and $50, taking some off the table. Order of magnitude, 1/3, no more than that. Does not warrant more than that, even on that day, even on that day. These are all just, unfortunately, just nothing candles. Blend them together, they start to get a bit concerning, and certainly a close beneath that trend ribbon would have done the job, and maybe even it did. And if you took some more risk off the table there, I wouldn't complain. But it's still a skin in the game sort of thing. I think at least a third on the table here, if not around about a half, order of magnitude still in the mix, on the basis that there's still some stuff happening. And as this is all one continuous move, and that's kind of the key to it, we actually haven't taken out any troughs. So we haven't taken out that trough. We haven't taken out that trough. We actually haven't made a lower peak yet. So I think this one's a little bit run of the mill, just definitely got some skin in the game. Maybe you've taken some off the table for price action 50 only. Where does the next bit of risk come out? I'd be watching those two levels. I'd be watching black candle close beneath the short-term trend ribbon. These are just areas where minus R kicks in again. As for adding risk, a little bit ditto on Lynas. I think there's enough of a problem here, and 50 is just enough in people's minds that let's see at least a higher trough come in first, a decent white candle, a bit of volume to tell me we know there's supply, so we need to trade with that supply. So volume, above average volume, tells me with demand, white candle, motivation of demand, with some volume tells me taking out supply, and I need to take out supply. So a bit of work to do on those two. Okay, let's go to, can I deep dive, Robert, can I deep dive into the US gas market on the weekend? Oh, he did. I'm glad. I thought he was asking me to deep dive into the US gas market. No, I've got no interest in doing a deep dive into the US gas market. I just look at the chart. All right, that's enough of a deep dive for me. But Robert did, and now he's telling me about it. Well, I'm going to go do some Duolingo on my phone. He's saying for fun, okay, not seriously, still only going to look at charts, but for fun. Details are on the Facebook page. Okay, good. I'll go check that out. And then there's some interesting charts, 3 potential turnarounds. EQT US ones. Okay, well, let's check out those charts when we get to the US ones. Hayden saying, hi, Cole, thanks for tonight. Is it in your uptrends list? Looks good, NGI. Yeah, it is. Yeah, it's in the broad list. Let me just double check. Oh, yeah, absolutely. I think it made featured tonight as well. Let's go. Yes, it did make feature because it's bloody awesome. I don't know where it's going. Look, $3. I wouldn't worry about $3. It's not $3. Nobody's going, please God, if you let Navigator Investments go to $3. $3 is not a round number in my books. 4 starts to be more important. There is research done that human beings, round numbers, have more of an influence on us than odd numbers. So I'm less interested in 3. I'm more interested in 2 and 4. But then we know that 5 is more important than a 2 or 4. Then 6, I wouldn't worry about 6. Nobody cares about 6. Nobody cares about 8. Oh, but even numbers, no. Don't worry about 6 and 8. Nobody's going, please God, let it go to $6 or let it go $8. In fact, $8, this stuff goes through $8 because now people think it's going to 10. So 10's the round number. I wouldn't worry about 15. Nobody's saying, please God, let it go to 15. 20, yes. 30, less so. 40, yes, interestingly enough. 50, definitely. And then you're vacuum into 100, really. And then 200, 300, 500, 1,000, whatever it is. Maybe not 300. Those it's the round number schedule, so, everybody. And I do have a PowerPoint slide from yesteryear that I'll dig up and show you next time, but not now. Let's go. How are we going for time? Awful, as usual. I better pick up the pace. Let's go to Hayden. Hayden's second one, FML. So yes on NGI. Let's go Zoom normal, and it's going to be yes on FML. I did see that one today also. It looks very strong. The candle today was nothing special, but this thing is freaking invincible. So this is, and I don't want to get people excited about it. Don't go and bet the house on it. But for me, in my experience, this is on the higher end of more often than not. A chart like that should go up. Okay, that's all I'm going to say. I don't know the future. I don't know where it's going next. But in terms of probability, something that is that freaking invincible, and I have this, and you can think of it this way, this old saying, it rings true in the markets. If it can't go down, it's probably going to go up. You've seen that a million times. If it can't go down, it's probably going to go up. So the opposite is true. If it can't go up, it's probably going to go down. So that one looks very interesting, although there was no clearly obvious signal to buy it today. What did we say? Minus the risk there. Oh, $2. Yeah, would have had to, and then you would have to get risk back in. So $2. Yeah, stand by that. Let's put some stuff on the screen today because this warrants it. Plus R, the ARCA plus R, even on today's candle, it's certainly on equals R for obvious reasons. KCN, That one doesn't ring a bell today, although I know it's been very much in and around the list. Okay, so it just didn't get in today with a little bit of an upper shadow. We're also near $5. Might have, a bit of an influence on the price action up there. That's all. But otherwise, certainly equals are from me. Okay, picking up the pace. ASL made the list today. I don't think I featured it from memory, just on the basis that there's a big point of supply there, and that's all it was. Otherwise, I actually did think a little bit about whether I should feature it. It nearly got feature. If it had more volume, so you can see just below average volume today. So my theory here is that this is a point of supply. So just think about this to see if you agree with my logic, right? Because at the end of the day, ladies and gentlemen, I am kind of making all this shit up. Do you agree? Like, I'm just making this shit up because there's no way I could know any of the stuff that I'm teaching you. It's all pretty much just made up. It's just me guessing plausible explanations for shit that's happening. But I reckon, what do you reckon? Hey, if I said this to you, would you believe it? I think this is a big point of supply. I know it's a big point of supply because there was a lot of supply there in the past. Some of the people who supplied there last time, they might want to supply there again. And that worries me because if I'm going along, I need to get through that level, okay? So I know there's supply I need to deal with. So therefore, price action is important, but volume starts to become important heading into that level because I need to trade with that supply. And the only way I can trade with that supply is through volume. I'm going to see it through volume. Lots of demand needs to hit lots of supply to get through it. And I just didn't quite see that today. But if I saw today with that candle brilliant, price action brilliant. But if I saw it with, say, double volume today, I'd be all over this thing because I'd go, okay, we are clearing the supply in the system. And we are splitting hairs here because we're talking about why it got in the normal list and not the feature list. Because if it's in the normal list, it's still plus R, right? It's still plus R. So we end up at the same conclusion, but helping people understand, maybe people who want to know, well, why does something make a feature? Why does Carl pick something out over another thing? Whether he's right or wrong, I don't know. People have just turned off. They've just gone, Carl's just made all this stuff up. Made up, I've observed over many, many years these things to be true, I promise. Nicholas saying, hi Carl, BC8. And I say, as long as you can bring it back to demand and supply, you're probably on the right track. Yes, I think this looks very interesting. Today's candle is very interesting. Again, though, look at that. And there were so many. Actually, this is really relevant today. There are a few, when you get to the, go to TradingView and check the watch list, of course, which only Monday Night Crew gets. There's a bunch of gold stocks in there, but not many of them actually made features. Just a few of them did. The ones that, what I said, they've got volume, they've got the candle, but they've got a bit more volume, a bit more supply removal. They're far closer, they're far closer to their point of supply. And just that proximity to the point of supply is telling us that it's less of an issue. The further away that you still are from that point of supply, well, there's more work that needs to be done and or the supply is just more powerful. So again, this harks back, maybe this is today's theme. We tend to kind of have a theme each day, don't we? Each Monday of what makes a plus R on the regular list and what makes a feature chart for me. And it is this idea of things that are coming back up, like gold. We saw gold. We like the gold commodity price chart. We're seeing lots of setups coming up. How do we differentiate between, and I'm trying to think of some that fall into this category. And I can see I didn't feature EVN, so that one is definitely on the broader list, EVN, but I didn't feature it, right? So you can barely see, you can see the volume today. See the volume today? Oh, the candle looks good. The price action's half decent. It's a decent rally off the short-term uptrend. So, actually it's not that far away from its peak there, but it just didn't see the supply removal that I wanted to see. So I know I'm going to have to deal with that supply. And sometimes going up on no supply is good too, don't get me wrong. If we don't have any supply areas to deal with, a big round number, a peak. So in here, going up on as little volume as possible is perfect. It's fine. It's just programmed buy orders, not hitting any supply. It's a supply side vacuum. But we're not in supply side vacuum anymore. We've got supply in the system. We know we can see it there. We know we have to deal with it. So we want to see a bit of it. So price action is very good. Volume is a bit useless by itself. Price action plus volume is very useful. and compare then to say an RRL, which did become a feature. This is tonight's theme. What isn't a feature? What is a feature? And hopefully we can all see straight up that, well, there's no bloody volume there. Okay. I've got egg on my face to some extent, but we can see from the proximity, ladies and gentlemen. Stay with me here. The proximity to the high on that one. I'm going to go edit the video. I'm going to draw in 2 times volume on that one. There had to be one in there, didn't there? That had it. VAU. No, that's got no volume. But again, proximity. I'm shooting myself in the foot here. There was just no volume on any of these things. But let's go with proximity. I would like some volume though. I think it's better if we get it. All right, moving along. Let's go to the BC8 is what we were talking about. It's ideal. Didn't get it, but it is ideal. And we don't have those things. And we can very quickly say from the ones I've shown you, so that it is productive in looking at those things that we just did, we're so far away here. Why not go for something that's much closer to that big point of supply? It's a pass for me at this stage. Looks interesting, but it's a pass for me. Nicola saying as an aggressive, it is an aggressive, yes, I categorise it as an aggressive turnaround. So I don't mind it. You clearly know what you're getting into. You clearly have waited for a strong signal today. And if you want to pursue that, then I encourage you to pursue it, because this is how we figure stuff out, isn't it, for ourselves? And by no means am I implying that this won't be a good one. I've agreed with you on so many things. All I'm counselling is, are there better ones? But if you just do all of my ones all the time, you're not going to learn that either. And I'm not saying this is going to go bad. This may go very well, and I think it will. I just have a style. You need to learn your style. If you can make these work, because the good thing about these, Nicola, as well, is you've got a really, we've got a really tight stop, and a logical bug out place as well. So, look, thumbs up. I think, if it appeals to you, go for it, because there's reason to do so. Roscoe saying, g'day Carl, just risk down on BRE. Yeah, I think so. We had some candles there as well. Obviously, we're going to look at a candle like that very harshly. In fact, its best buddy next door is also requiring, in fact, today's candle also. So look, certainly for me, I cannot possibly run at a full risk position here. I know last time we saw it, we were equals risk, we were next demand side candle. And yep, that's just how quickly things change, and they changed really quickly this time. And we looked at it probably there, because there it's still good. There's nothing bad in it at that stage. And then we don't know what's going to happen next, and that's unfortunately it. And it's frustrating. It's annoying. It's infuriating, but it's just the way it is. I know you're gonna curse my name and say I should have just sold the whole lot up there at $6. Okay, give it a go. Try that. Maybe that works for you. Perry's got some ASX stocks actually. NFM, which is not that one. It's that one, which looks fantastic. And I know if it looks that good, and it hasn't been in my scans, it's because of that. So it's just invisible to me. But we all know that this meets my criteria at 100,000%. So plus R, and equals R. Happy to add risk. One of the best charts we've seen today. Looks a little bit sketchy. I was going to say liquidity is not that great, but actually, look, half decent liquidity. I know it's a 2-cent stock, so you saw 10 million, but it's only a 2-cent stock. Actually, pretty consistent there, isn't it? So I'm okay with that. And weekly chart, is there anything really sinister out there? That might have a bit of an impact, but I think that's still miles away. And then there's everything else is even further away from that, so I wouldn't worry about it. So unequivocally, yes, happy to add risk on that one. The next one is MDN. Am I right on that one? MDN, I think I am. MDN. I'm not finding an MDN, so just double check that one for me, Perry. And DNL was a yes, that's definitely in my list because of obvious reasons. There's a little bit of volume there. That's the perfect candle. You can't get any more perfect candle than that. And not blue sky, there's a bit of supply. I'm guessing that's going to kick in. I was going to say 4, but it's 380. I'm happy to give it a go on the basis that that candle is as good as you can get. I think we're okay. I think we'll make 1-to-1 if you squint into that one. Yes, from me. And well, it's in the list. I shouldn't have to write it, but we'll write it anyway. And ANZ, yes, I mentioned that in the introduction. I did want to mention that, did want to talk about that today, and I'm glad you've brought it up because I forgot. And that's an incredible candle there on a top 10 stock, isn't it? So that's going to help the index. I mean, that in itself is going to bench press this index and may rescue everything else, as the banks have done a few times in the last 12 to 18 months. Let's just quickly look at the rest of them. I felt that CBA is turning around. I think this is a really important candle here. That's the one that does it for me. I know it's pulled back a couple of days, but having a look at that ANZ chart, I think banks are in a decent place. NAB, that's less so. Obviously, that big black candle is the results. Westpac, better. It's had a dividend. That's why that looks like it's a little bit worse, but it is actually much better because of the dividend. So ANZ, CBA and Westpac look very strong. ANZ and Westpac are the two strongest. CBA looks good. NAB, neither here nor there at this stage. I'll just see if Perry's fixed that MND. Oh yes, MND, 100%. Yes, that's in the list. That's the perfect. If I said the other one was perfect, this one's perfect as well. Because I can't say it's more perfect, can I? It's just as perfect. So that's also a feature for tonight as well. So I know we spend a bit of time and, doing the in-between stuff, but there are actually some really decent setups tonight on the ASX. Robert, I'm going to move very quickly. COV, which is that one. That one. Oh yes, and I haven't seen it. Only for that, Robert. But this would be my features tonight. Yes, I love these really obscure ones that print big black candles on volume. And they're pure punts. Hey, we're not going to go mortgage the house on these, but I love to punt these. Yes, for me. And CZR, that one is meeting my liquidity filter, and another example of exactly why, because that's the equivalent sort of candle. It's like the SDV candle as well. I know a little bit of upper shadow today, but I felt enough going on there in the price action and volume to warrant copy and paste on this one, isn't it? Just copy and paste from last week. And HAR, which actually is not ringing a bell today, which is that one there. A bit more work to do. A bit more like the Lynas, Lynas, and what was the other one we had just a bit ago that I think Nicola had it. I can't remember now. BC8. So it's a bit more like that one. So it's not an obvious one that I'd gravitate towards too, but I can see why, and I'll let you do the work on how that will progress price action and candles. Haraju, CZR, I've already discussed that one, and AMS, which is not ringing a bell. Oh, I like this one. Atomos, that rings a bell. This one, this was a market darling, wasn't it? Back through here. Okay, Atomos. Yes, for me, absolutely. Like I said, I love it. It's just not meeting the turnover filter. That's the only reason why I haven't seen it, but I think you know that this is an all-over-it proposition for me based upon my trading model. So thank you for bringing that one to my attention. It won't run in the chart watch things. You won't see them because they're strictly turnover filter sanctioned, but that's why I love coming here on Monday nights. Okay, we'll do US ones in a second. We've got SS1 from Peter. Yes, I don't mind it. It was sort of in that same boat as ASL. I felt ASL was far better advanced in terms of it. I'm pretty sure it had higher peaks and higher troughs, or at least a better semblance of that. Obviously closer in proximity to its point of supply, which is dominant and is massive at this stage. But otherwise, it looked very good. I think it's, again, more like that Lynas, more like that BC8. So this is actually more like the BC8 where I said to Nicola, I can see what you're going for. It makes perfect sense to me. I won't object to you doing it at all. If you have it, then it's obviously equals are. We mean that we know that minus R's off the table, so that's good news. So it's a yes from me, but it's not necessarily one that I would place over some of the other ones we've seen tonight. That's all. What is .ISE? .ISE, you got me on that one, Peter. MSA, Oh, these are Toronto, but what is ISE? Oh, LSE, LSE. Okay, do capitals for me, please, Peter. Yeah, take some pity on poor old Carl here, trying to decipher everybody's hieroglyphics. We get down to, please stop putting any more in. I know I haven't said that, but I thought that was self-evident. Let's go to Robert saying, currently the only non-China supplier of dysprosium oxide. Which one was that, dysprosium oxide? Not that I care, but that's fascinating. You've got to have your dysprosium oxide. Last chart I posted on Facebook stalled at 15 ES. Well, I don't know. Go back and look at all the charts that ever got to 15 and see how many stalled there. We're always going to have one or two that do, but I don't know if that proves the rule. I'm not saying it's not a big round number. Clearly, it's more important than 12 or 13 or 14 or 16 or 17 or 18. I get it. Rob's saying he's on ASL. Okay. MND, we fixed that one. Always great value. Thanks very much. I think Roscoe's had enough. He's been nodding off. He's out of here. Robert, we did Lynas. I don't know if you remember or if you got here late, then check the recording. We're heading back up the list now and we're going to do only US stocks. So we're not far away. Not terrible on time. I've gone later than this. Let's go Perry first. And we are going to do, let's go to the live market analysis open anyway. And I'm getting lots of requests from ChartWatch people, so market index people wanting these indicators. Carl, can I have the OTR? Carl, can I have can I be volume? Can I have your RSC? And the answer is invariably no. Monday Night Crew, that's a different story. Of course, most of you have it. I think I added everybody who asked for it by default anyway. Who's saying he's got it. But if you don't have it, send me an email and I'll put you on. But I think I default added everybody who had sent me a username. So let's go to CAH. Cardinal Health, yes, that makes sense. Oh, man. I love doing Perry's ones. We get to the US and I can do. I'm not worried if I've only got a few minutes left because I can do Perry's lightning quick because they're just invariably plus R. Let's go. Plus R enter equals R. I type like a 2-year-old though. Escape. Move it over there. Click save. I really should do the due diligence and have a look out here, but I'm guessing there's nothing there and there isn't. So it looks even better. I shouldn't have to explain to you why that is perfect. 10 out of 10. CM, Canadian Imperial Bank of Commerce. I think the other one looks better, but this is still very good, obviously. This one's a bit more slow and steady. That one is more explosive. We've obviously looked at it in the not too distant past, and I'm just going to go detail on that one. I'm guessing at the time I looked back and I didn't see anything. And look, I can't fault this at all. So some people like the slow and steadier ones because what I love about this is the complete lack of downside volatility, and they're my favourite charts. Lack of downside volatility. Plus R and equals R. Save, escape, and SPHR, Sphere Entertainment Co. Oh, that looks good too. Let's go weekly chart. Nothing there. Happy with it. And sort of in between the two, isn't it? It's the slow and steady one, the explosive one. A little bit more downside volatility here, but impeccable. 100, just keep an eye on that one, but I don't think there's any problems with reward to risk. So once again, unequivocally, plus R and equals R. Click save. And one more for Perry, MTSI. And, Perry has done all the hard work here. We could find millions of really average charts, and he really has helped us out here and done the hard work. And I don't have time to do these scans, unfortunately, in my life at this time. I have in the past, it's just not now. I get through the ASX stocks pretty quickly, but I know this is a much bigger commitment, plus R. So we really should be very grateful for putting these opportunities in front of us. And I expect many of you are taking those and enjoying them as well. So let's go a yes on that one, obviously, and go up the list now. Thank you, Perry, to get into Peter's TSX stock first. That's MSA, which is Mineros SA, which is a South American company, funnily enough, and that looks actually very good. I nearly said, oh, I wonder what they do. Is it copper? Is it lithium, perhaps? South American, I'm guessing. Could be iron ore. Vale's obviously iron ore as well. That looks impeccable. I like the weekly chart even better than I like the daily chart, to be fair. Yes from me. That looks really interesting. I know there's a bit of a point of supply here, but it's taken out these 2 points here. It's done it with some very strong candles. I'm guessing 5 was the issue, and we're through 5 now, so that makes me like it even more. I'm happy with that one. Let's go plus R equals R and click save. I'll just quickly nip down because gold and silver. Okay, so I knew Peter was going to tell me what it does. Let's go HOC. Now this one is for the London Stock Exchange. That's right, HOC, not MOC. You might find it. There it is. Hochschild Mining. Not as good as some of the other ones. It's more like the BCA. I know we've had this category because of what's happened. Up, crash, bouncing off the long-term trend line. So, and we know bouncing off the long-term trend line, it's a good place to buy. Totally get it. So yes for me on that basis. Go into these things eyes wide open. Understand that there was a wall of supply here. And that's why you haven't seen me put a lot of those in. I'm worried about the wall of supply. I'm worried about it coming back at some stage. But we've got to bounce. So let's see how it progresses. And you're all more than able now at figuring out when stuff isn't doing the right thing anymore. Let's go to US SanDisk for Haraju, SNDK. Oh, look at that. That's a monster. That is going exponential. So it's a yes for me. I love buying exponential stuff. I'm not going to bet the house on it, but I want to have at least a small position until this gets to 1,000. I want to have some skin in the game. I want to be the person that says, I'm still in it at 1,000. And to do that, I need to get in it at some stage, which would be today. And, I know it's had a decent run. I know that, but I want to have some skin in the game here. So yes for me. Plus R on that one equals R if you've got it. And RZLT. Resolute. Oh, that's wonderful as well. Let's go back here. A little bit of history. Nothing close enough for us to worry about. So happy to discount that and just trade on what I see. And I very much like what I see there. So through the $10 round number. Why did it stop? $10. There you go. Can't make this stuff up. It just sounds so silly, isn't it? If you told a layperson that prices stop often reverse in the stock market for no other reason but a round number, they just think it cannot possibly be that simple. People are simple creatures and they do very simple things often, and that's what we are hoping for. Let's go, I'm just pausing and filling time as I'm trying to find the next US one. We will look at your NG1 again. I know we looked at it before, but seeing as you've been doing all that research on it, well, I mentioned at the start, I said it's starting to look interesting, starting to look turnaround setup-ish. Still a little bit early days. We still want to see some upside volatility in the candles here. It's a bit circumspect, it's a bit conservative. I don't think we're seeing that FOMO just yet, or that belief from the supply side that we're going to get so much more. I think the supply side's still pretty active in and around the place. So yes, turnaround setup-ish, but I wouldn't say that's a slam dunk or a lock just yet. Let's go to Hayden. We've done Robert. We're going to do your US gas stocks. Here we go. EQT. If natural gas is going to turn around, we will see it in the stocks. The stocks will often lead the commodity price. And potentially some of that happening here. This is actually a very decent chart. Long base pattern. all looks good to me. Look, I could add risk to it. I don't know if this is the best thing I've seen tonight, but it's very solid. If it's a theme you're looking to play, then there's no objections from me on the basis that it meets all of my criteria at this stage. So yes, on that one. TRP is the next one. TC Energy Corp. Yeah, look, in many ways it's probably cleaner in the last few candles than the other one. It's cleaner in that it's very straightforward. Like this thing goes to the green ribbon and then it bounces off it, and that's what it's doing now. A little bit perturbed by the consistency of the supply through there. Why was it so consistent? Where are they now? Are they going to come back soon? Maybe. But I'd happily, look, with all sincerity, I'd happily have a crack at this because I like to have that variety in my setups, and I feel that this is a very different setup to a bunch of the other ones we've seen tonight. So it's a yes from me. I think that is a very interesting setup. And the last one for tonight is NI, which is NiSource. I'm a little bit concerned about that big black candle. It happened on substantial volume. There's a bit of supply there. Let me see a close near it, and I could say yes, assuming that something good's happening over here, which actually is pretty good there. But if I had to pick between the two you've shown me and this one, this would be the last on the list for now, but it certainly could get better. I don't think I'm adding risk today, but certainly I could maintain what I got, and upon dealing with that point of supply, I could add the risk there, Robert. Okay, that is everything today. No, it's not. Adonis screaming at his screen. Roscoe left. Adonis is still here, so I can't just say, well, he's gone. I don't have to do them. IFS. IFS, here we go. Deep breath. We're nearly there. And we know that on Wednesdays, not everybody gets their questions answered, but on Mondays, everybody gets their questions answered. IFS, Adonis, just that last candle, it's a classic. It was looking bloody good before that. Just a classic. I think it still equals R. That's not a reduced risk for me just yet. It is far from an ideal candle. Look, plus R on the next demand side candle. Also, it should go without saying, but we might have a bit of work to get there. Cancel that. Pressing escape too many times can do bad things. I think we just want to, look, we're getting close to the short-term trend ribbon. There's a little trough in there. Look, somewhere down there, we're going to want to manage our risk, certainly, and maybe a little bit before that. Look, if you don't have it, I don't think there's any desperate need based upon that last candle. If you do, then it's not a train wreck by any stretch of the imagination. That's probably even too strong a word to use in that sentence, but just keep an eye on some of those points of demand there. BE is the next one, and we are going to do a little bit the same on that, as in very warm. All the trends are in place. The price action is sort of just fluctuating a little bit, maybe beneath 150, but not so much that is clearly the end point of this trend. Demand still coming in these lower shadows. Look, it's okay. Long story short, it's okay. It just needs, I think, a couple more candles, just edging back up, just chipping away at the supply that's just coming into the system there. A couple of, look, these are shadows. The shadows are telling me there's some supply lurking, and we just want to be sure that we've dealt with that supply. So that candle's very good. Don't get me wrong. I'm just worried about some of the supply up here. No, next high close, chipping away, and it could be a yes from me. At the moment, I think I'm equals R, and then let's go plus R on the next demand side candle that closes, I would say, above 142. Okay, so you can't see that, but as time goes by, that will become reveal itself on the screen. LITE, Lumentum Holdings, very good, no complaints. Obviously, with that candle there, we're just seeing how this little pullback plays out. You could go now. Again, I wouldn't complain about it, but again, just another couple of decent candles here. Because we know there's some supply in the system, we just want to see the price dealing with that. So equals R is without question, no doubt about it. Plus R, same, next to bandside candle. I don't think we need to wait for any particular price here. Just like the next high close. Today's, that's Friday's candle is pretty close to it, isn't it? So I maybe splitting hairs. Do I think this is going to just pull back a little bit, maybe a couple more days? I just think it needs a little bit more cooking, that's all, but it's very close. We're talking a 9 out of 10 here. And just, see, this is better. So this I can now do very quickly because it's very straightforward. Much smaller shadows pointing up compared to the last two. We're there. I know 300's close, but it's not really a round number I'm too fussed about. This is the best one I've seen out of those ones that you've given me there, Adonis. So this is clear cut for me. So say it again. Oh, okay. Well, then the market is kind of saying out of those ones, it's the best one too. The market's kind of telling you that. Makes it tricky. Gapping up $13. Yeah, I don't know if I'm going to chase it on the open. Certainly if it can close near its high, maybe having a go, but a little bit tough. I don't mind buying gaps, but I need to see them closing very close to the high. That's all. If I'm going to have a crack, so it'd be more of a wait for the end of the candle thing, but looks interesting. For the recording, because people in the recording can't hear people speaking in session, Adonis is letting us know that it's actually going to open up $13, so that's why I'm having that conversation. All right, I think we're done. Stick a fork in us all, and I think you'll find that we're cooked. So let's keep moving, or finish this off at least by reminding you everything that we've discussed tonight is general in nature. Of course, seek professional help to determine its appropriateness for you. Trading is risky, you're going to lose money. You could hold Lynas all the way back down. It's always you that's responsible for the stuff you do, and not me, but hopefully my responsibility in this whole process is to help you understand when you might want to do some of the stuff that you do. Apart from that, it has been a pleasure chatting with you this evening. Hopefully you had fun. I did. I thought we did some great work tonight, and had some really good case studies, and saw some fantastic setups. So it was worth my time, and I trust it was worth yours. All the best for your trading and investing till we catch up again. Bye-bye for now.